Hello. Last month, spot Bitcoin ETFs in the US attracted a fresh inflow of $15 billion. But 68% of Americans still say they don't understand crypto. So, what if you knew the rules before the next big wave hit? In this video, I will give you a step-by-step game plan. 3 macro forces that will push Bitcoin to new heights. 2 AI altcoins quietly accumulated by Wall Street. And 4 risk traps the media never talks about. Stay until the end, because I will provide the free tracking chart used by CNBC analysts, but not shared. If you're ready, let's dive in. First, the big picture. Why is 2025 critical? There are 3 reasons. 1, the interest rate cut cycle is starting. When liquidity increases, Bitcoin breathes. 2, election year incentives. Fresh money flows into risky assets. 3, Bitcoin halving. The supply shock pushes the price up. When these 3 forces combine, 2025 could be a complete liquidity storm. First, the big picture. Why is 2025 critical? I am listing 3 reasons. 1, the interest rate cut cycle is starting in the US. While the Fed brings inflation under control, will it partially open the liquidity tap? History shows us, when liquidity increases, Bitcoin also breathes. 2, election year incentives. In the past, during every election cycle, economic support packages pumped fresh money into the market. A portion of this money is also transferred to risky assets, namely crypto. Bitcoin halving. The reward halving reduces the selling pressure from miners by half. Even if demand remains constant, the supply shock pushes the price up. When these 3 forces come into play simultaneously, 2025 could be a full-blown liquidity hurricane. Now let's delve into the details. Dollar liquidity, that is, the free money in the market, almost dances with Bitcoin. When the M2 money supply exploded, in 2020, BTC increased tenfold in 6 months. We are looking at projections for the end of 2024 and the beginning of 2025. Analysts predict that M2 will grow again. This means fuel for risky assets. The question is this: how will you use this fuel? As the liquidity wave approaches, I am doing DCA, which means regular buying. Timing the wave perfectly is impossible, but entering the water early with small purchases allows you to stay on the board when the big wave comes. Do you feel inflation in your daily life? Share in the comments. Real stories are as important as data. The biggest unknown in crypto was regulation. But the picture is becoming clearer in the US. The authority sharing between the SEC and CFTC is in Congress. Texas and Wyoming have become mining havens. Spot ETFs are lined up from BlackRock to Fidelity. As uncertainty decreases, institutional money is relieved. The institutional ramp is also ready. Fidelity added Bitcoin to 401ks. BlackRock launched a tokenization pilot. High liquidity, plus clear regulation, plus institutional bridge equals potential explosion. But Bitcoin is not the only player. Now, we look at 2 altcoins. Dollar liquidity, meaning free money in the market, dances with Bitcoin. In 2020, M2 exploded. BTC increased tenfold in 6 months. Analysts say M2 will grow again. My strategy is simple. Regular buying as the liquidity wave approaches, meaning DCA. Timing the wave perfectly is impossible, but entering the water early with small purchases allows you to stay on the board when the big wave comes. A question for you. Do you feel inflation in your daily life? Share in the comments. Real stories are as important as data. Install the Bitensor, decentralized AI marketplace. Model, earn tokens. GitHub contributions increased by 240% in 3 months. This means a developer influx. 2, render. It distributes Hollywood's rendering power. The Apple Vision Pro Roomba increased the price by 18% in 1 day. The number of GPU nodes has increased by 150% since the beginning of the year. The potential is high, but so is the risk. It never exceeded 15% of my portfolio. Knowing the risks is essential for success. The first is smart contract vulnerabilities. In 2024, DeFi hacks stole $2 billion. 2, exchange risk. Don't rely on a single exchange. Use a cold wallet. 3, excessive leverage. US traders are using 10 times leverage on perpetuals. Volatility will wipe you out. 4. Tax surprise. IRS form 8949 requires each transaction to be reported line by line. Don't get caught unprepared. Avoid these pitfalls. If you hang on, you stay in the game. Here's the application part. DCA layers. Weekly coffee money to BTC. As much as your monthly subscriptions to Ethereum. Part of your quarterly bonus to Tau render. Position, sizing table. Google Sheets link on the screen. Just enter the risk percentage, it calculates automatically. 3-pronged news filter. Source, data, conflict of interest. If one of the 3 is missing, the news is trash. Download the table, copy it, apply it to your portfolio. Knowing the risks is essential for success. First, smart contract vulnerabilities. In 2024, DeFi hacks stole $2 billion. Second, exchange risk. Don't rely on a single exchange. Use a cold wallet. Third, excessive leverage. US traders are opening 10 times leverage on perpetuals. Volatility will wipe you out. Fourth, tax surprise. IRS form 8949 requires each transaction to be reported line by line. Don't get caught unprepared. If you avoid these traps, you'll stay in the game. The microstructure that the market doesn't see. Many of you look at the price chart, but the price is like the latest news. It's the last to know. Professionals. Look at the order book depth. There are 3 signals there. First, liquidity pockets. Suddenly withdrawn limit orders in $1,000 range. Or the wall where the big player pushes the price. Average order lifespan. If orders are being cancelled within seconds, a bot war is happening. If they remain for minutes, it's an institutional layer. Third, asymmetric slippage. If the slippage difference between the buy and sell sides is over 50%, liquidity providers are afraid of a downturn. When I overlay these on a single chart, I don't need to watch the price candle, because I can see where the wind is blowing before the candle even forms. Now everyone is talking about the Halving ETF. They're right, but these are now headlines. There are 3 new narratives on the professional radar. First, RWA 2.0, institutional tokenization. BlackRock's Bond Pilot was a preview. The CTO of the first real estate portfolio in the US is coming this year. This means that a portion of institutional capital will be locked in for fixed income plus chain efficiency. The initial adoption shock creates a demand surge for infrastructure tokens. Second, DePIN, the tokenization of physical infrastructure. Following the Helium wireless network, next in line are electric vehicle, service stations, and micromobility. Token incentives automatically scale as the physical network grows. The station owner earns tokens while selling kilowatt hours. The user receives a discount when making a payment. Both the revenue model is clear and it benefits from the ESG tailwind. Third, privacy plus AI synergy. Open to private data. Privacy chains anonymize this data and bring it to the market. Thus, user data becomes a purchasable asset. AI training accelerates. Data owners earn income. These 3, data, fuel, reward cycle, are still in the early stages, but addressable in billions of dollars. When the chart turns red, the difference between a professional and an amateur is muscle memory. The 3-step 90-second reset I use. 1. Stop. Take your eyes off the screen. Take 10 deep breaths. This physiologically lowers the amygdala level. 2. Reframe. Instead of saying I'm losing, say to yourself, the market is giving me a discount. This simple language trick reduces cortisol secretion by 20%. 3. Microplan. Return to the screen, ask one question. Was this price level part of my strategy? If it was, execute. If not, skip. Making trades outside of your strategy is a yellow card in the professional world. If you make this a routine, volatility will work in your favor, not against you. Now I invite you to the game. Choose one of the 3 narratives I just mentioned. Find a single data point, on-chain or off-chain, and write it in the comments. For example, the locked asset of the X protocol increased by 25% in the last 30 days. I will highlight the most interesting data with a video screenshot next week. Thus, we will become a community that not only watches, but also produces data. Today, we offered a wide menu, from the anatomy of the order book to tokenized real estate. If we expanded your portfolio vision, even with a single sentence, you'll want to save the video and go back to take notes. Send it to a crypto enthusiast friend. Because knowledge becomes alpha when shared. Subscribe and turn on the bell. I continue to scan the data. You grow your earnings too. See you soon.